Hi there, it's Bill with Smart Trades. It's November the 2nd around 5:10 p.m. Pacific time, and let's take a look at the stock indices. Let's start off with the Dow today. I still believe that this pattern that started back in the middle of October is a triangle, a contracting triangle, and it's allowable in such patterns to make a new high in the B wave, or in this case the D wave, but overall the pattern should basically contract, and both in terms of volume and volatility, and indeed we're doing that. The implication of a triangle is that it's usually a pre-termination type pattern. In other words, it's a pause. You usually make a new high after the triangle, but that new high is often the end of the move, at least up, to the extent that it's at the end of the move to the scale that the triangle is terminating. And in this case, since we are indeed at longer term targets, there's a good chance the next thrust to a new high will indeed be an important high. That said, we've been looking at the 11,258 level. I don't think it's unreasonable to assume there's a probability that we're going to exceed that a bit if we do indeed break out of this triangle to the upside, which I think we will. Additionally, if you'll notice, the breadth is fairly strong. It is diverging just a little bit from previous peaks, but generally speaking, when you get a rally on breadth of this strength, about closing around 2200 on the NYSE advances, it usually means that there's at least going to be a retest of that high and perhaps some higher prices, and indeed I think that's what we're going to get. Here we are with the S&P 500 cash. Once again, we've got our contracting triangle. I believe we have made a moderate new high here today above D. It's possible this whole pattern is still D and that we've got one more decline to go before we make a new high. I think there's a good chance we'll exceed the 1202 target for the S&P. Perhaps we'll go up and test the 1220 area, which was the April peak. And that is the logical target for a B wave, which I think we're in. That said, the Dow obviously would more than likely exceed its ideal target if the S&P hits its ideal target. The NASDAQ is well on its way above those highs from April, and indeed not in a contracting triangle. That said, it certainly does have a bit of a wedge shape. There hasn't been a whole lot of upside momentum, and let me just back up one space here. If you'll notice, with the exception of today's slightly higher close, basically we've been within just a couple of percentage points of the mid-August peak around the 1184 area. So very little net progress for the S&P and the Dow. The NASDAQ doing a little better, but nonetheless a very slow-moving advance, and in fact a potential wedge. And wedges are also potentially terminal. So more evidence that a high is near. That said, the breadth is even stronger, relatively speaking, on the NASDAQ, as you can see here, highlighted with the little blue arrow and the breakout of this trend line. So I do believe that although we may come back down a bit in the near term, I think that we've got somewhat higher to go. I don't think a peak is in yet. Here's the Euro FX. Now, to me, it's not clear whether or not this triangle is complete. It's certainly possible to count it as done. That said, the breakout so far is relatively muted. Could be that folks are just waiting to get the election over with before making a commitment. Also looking for more information from the Fed. That said, it's possible we have a completed triangle here, and it's also possible that yet another pattern is evolving here, that we've got an A down and this whole rally is a B. The implication of that is probably one more drop down below the 137 area before a likely new high. That said, I've got a low confidence in either count at this point, so no real strong opinion here on the very short term with the euro. I think it is going to make a new high, but exactly how we're going to get there remains to be seen. And finally, here's gold, 240-minute chart. And again, we have that clear 5 waves down in gold, possible ABC back up. And it is interesting that whereas the euro has been flirting with new highs in the stock market, the NASDAQ in particular making new highs, gold is lagging for the first time in a while. It could be a bit of a red flag in terms of the inflation dollar-fueled scenario for stocks and currencies and so on. So let's watch it here. It is possible that that gold has peaked, and certainly worth watching. That said, there's nothing definitive in the short-term pattern to indicate that the top is in. The move off of the peak from a couple of days ago is not definitive to my way of thinking. Anyway, thanks for watching. Hope you're having a good one. Bye-bye.